All right. So sorry about that. It was the network. I was saying that to enjoy pioneer incentives, right? You are we have 71 industries under pioneer list. Then I was giving an example of those 71 industry. I was saying we have sugar production, right? Salt production, paper pulp production, glass production, cement production, of course, mining industry, mining companies, etc. Those are companies under the pioneer list. Now, pioneer legislation, are we together, please? Is governed by industrial, are we together, please?
Yes,
Okay.
sir.
Yes, sir.
Governed by Industrial Relief Act. Of course, Industrial Relief Act is, sorry, I mean Industrial Development, not Industrial Development, Income Relief Act, Tax Relief Act. That's the law governing pioneer legislation in Nigeria. Are we together? And they gave some conditions for a company or for an entity to enjoy pioneer incentive. Number one is that the participation, number one is there is no participation in the industry or sector. So one thing I can qualify you for pioneer incentive is if you are coming to be a player in an industry where there is no participation at all, right? Number two is where there is little participation in the industry, right? Number three, are we together, please? Where it is in the public interest to grant pioneer incentive. Number four, the entity must have a minimum asset base of 100 million naira. So those are the conditions that will give you access to having to enjoy pioneer status incentive, right? Then what are the considerations for granting pioneer status incentive? I have said it before, for granting pioneer status incentive, considerations for granting pioneer sector's incentive. Number one is employment generation. You must be able to prove to NIPC, that's National Investment Promotion Commission, that you would employ Nigerians. And of course, number two is there must be value addition to the gross domestic product and the overall economy. Are we together, please? Are we together, please?
Yes, sir. Yes, sir.
Any
Yes, sir.
question?
Yes, we are.
What's the meaning of NIPC?
National Investment Promotion Council, or Nigerian Investment Promotion Commission, sorry. Nigerian Investment Promotion Commission. Are we together, please? Can I rub off the board? Can I rub off the board?
Just few seconds, please. Few seconds, please.
Okay, no worries. So we said NIPC is Nigerian Investment Promotion Commission. Abi? If you'll be watching on YouTube, don't forget to subscribe so that you can get notification for other videos once they are uploaded. That's if you'll be watching on YouTube. But the YouTube link will be shared later. You can also feel and comment and like if it's interest you. All right. So there will be a playback again on we'll upload it on Google Drive and also on YouTube. So you can have a playback at the end of the class. Can I rub up the board now?
Yes, sir.
Yes, please.
All right. So let's go to the part that will interest you now. What are the rules for computation? Of the rules for computation. Number one is that the pioneer incentive means tax holiday for the taxpayer for 3 years and renewable for 2 years. The first 3 years is automatic. For the second 2 years, you would have to apply for the renewal. So the tax authority, the taxpayer has the liberty to either renew or not renew. And also the tax authority has liberty to either grant the incentive or not grant incentive after the first 3 years. Does it make sense to you? So it means that after the first incentive you have will last for 3 years, right? The second one will be renewed after the 3 years. So it is either you get it or you don't get it, or it's either it is granted or it is not granted. That's one. Number two thing is we have to consider something we call production day, right? Production day is the day certified by the NIPC and the tax authority for the business to commence operation. That is, it is the day that the taxpayer is granted pioneer certificate. Number three, are we on the same page, please? Number three thing you have to note is that
Yes, sir.
accumulated profit during the pioneer period will be ignored in the post pioneer period. Are we on the same page?
Can you explain that number 3, sir, again?
Accumulated profits during the pioneer period will be ignored in the post pioneer period. Number four, accumulated loss in the pioneer period will be carried forward. That is, it will be relieved in the post, it will be relieved from the post pioneer profit. Right? So the profits in the post pioneer period will be ignored, the losses will be carried forward and will be relieved from the post pioneer profit. Are you with me? Number five, assets purchased in the pioneer period will be deemed to be purchased in the post pioneer period. I will explain all of this with the illustration, but you have to understand all these rules one after the other. So assets purchased in the pioneer period will be deemed to be purchased in the post pioneer period. Hence, the assets will be qualified for investment allowance, initial allowance. I said it before that beginning from September 1st, initial investment allowance is no longer claimable. Do you understand? And annual allowance.
Sorry, sir. Please, can you come again with what will
Beginning
not
from
be?
September 1st, initial investment allowance is no longer
Okay.
granted on plant and machinery and plant and equipment.
Oh, okay. All right, sir.
All right. That's according to Finance Act 2023. Are we understanding what is on your screen now?
Yes, sir.
Any question? So you have to note the five rules, and then you just move like that. So let's do illustration. Can I rub off my butt?
Hold on, sir, please.
All right, I'll hold on. Like I said, don't forget to watch the playback later.
All right, sir.
Can I rub off the screen?
You can continue,
Yes,
sir.
All right, so let's now do illustration. Right. Can we all see my screen?
yes, sir.
Yes, sir. We can see the board.
Okay. So let's start. Let me read from here. So we have the quest for economic development in every sector of the country has enabled the federal government to come up with various tax incentives, especially for private companies. Nature Agricultural Products LLC, a medium-sized company, was incorporated on June 10, 2015. Abi? Was incorporated on June 10, 2015, as a manufacturer of animal feeds. The company thereafter applied for pioneer status and was granted a pioneer certificate on March 1, 2015. The following details were provided with respect to business operations of the company. All figures assumed to be correct, right? Capital expenditures incurred on or before 28 February 2018, all figures assumed correct. You are required to compute one, adjusted profit for the relevant years of assessment, and two, compute the tax liability for the relevant years of assessment. Okay, sorry. Yes, it is I can pass question. But I can't really recollect the year I extracted it from. But I can pass question. You can check 2019 that 2019 or 2020. It should be 2019. Nature Agriculture. products. LMC, right? So the first thing they wanted me to do is to compute the adjusted profit. But before I compute my adjusted profit, I want to do my workings and note some salient points from the question. Number one is I want to note the production day. Production day is when? Production day in this question is March 1, 2015. And we've agreed that production day is the day a taxpayer is granted pioneer certificate. So we have March 1, 2015. Abi?
Yes.
Number two, the pioneer expires. I will check, did he renew it or not? So if he does not renew, they said the management of the company did not apply for extension of the pioneer period. So it did not renew the pioneer incentive. So we have, so it means it stops February
2018.
2018, Abi?
Yes, sir.
Good. Now, the next thing I want to go and check is, does it make profit or loss cumulatively to 2018? They said accumulated profits as of February 2018 is 3.8. So since it make profits, so accumulated profit should be what? Ignored. Accumulated profit in the pioneer period should be ignored in the post pioneer. Does this still make sense to you?
It is.
Now, the next thing is, he has a tax holiday, and the tax holiday also expires in February 2018, Abi. So the company will then will be subjected to tax from March 1, 2018. Abi,
Yes, sir.
are we on the same page, please? Then number 5
Yep.
things I want to notice. Commencement rule will apply. Beginning from March 1, 2018. Right? Number 6 is assets purchased. Are we together, please?
Sorry, March 1, is it 2018 or 2015, sir?
2018. We said, and from March 1, 2015 to February 2018, it was tax holiday. So commencement rule will now begin to apply from the beginning of the expiration of the pioneer period. Right?
Okay.
So assets purchased during the pioneer period will be deemed to be purchased the post pioneer period. So let's go and now solve the question, because I've noted all the points to consider. Abi, the first requirement is compute the adjusted profit. And so, because the examiner said compute, so me, I will just change the word and say computation. Abi? of adjusted profit.
Hello.
Yes.
Please, what's the point in number 6? What's the 6 point noted?
Assets purchased during the pioneer period will be deemed to be purchased in the post-pioneer period.
Please, can you explain that?
Yeah, that means any assets purchased before March 1, 2015 to before March 1, 2015, after March 2015, but before February 28, 2018, will be deemed to be purchased on March 1, 2018.
After the expiration of the
Pioneer
pioneer
period.
people.
Exactly.
Okay, thank you, sir.
You're welcome. So computation of adjusted profit for what? They said relevant years of assessment. So given this rule, I will check again what is the profit. I have profit to March 1, February 28, 2019. That's the accounting year in Abi. So for 2019 year of assessment. Right? We have net profit. Figure, please.
Hello.
15,
350.
350, Abi.
350. Yes.
Hello.
Add.
Hello.
Yes,
No,
I can hear
yes.
you.
I think it's supposed to be 20 years of assessment. Since the accounting date is 2019.
Sorry, did I put 2019? I mean 2020. It's on preceding year basis. So I mean, thank you. Depreciation. How much is depreciation?
1725.
17.
25.
Legal charges on
1.9.
leasehold right is how much?
1,500. 1.5.
1,000.
500.
Right? We have loss or revaluation. Right?
Yes.
2001.
104.
Right? Fines for traffic offense.
70.
Right? We have expenses for increased share capital. 1201, Abi.
Yeah.
What's the total now?
Right. 6,600.
6,600, sir.
6,000?
6,600, sir. 600.
Right.
Yes,
So
you're
I have
correct.
adjusted slash accessible. How much is that?
21,950.
21.
Yes, correct. 950.
So with that, I'm through with the first one. So I will now go again and then do, as part of my workings, the second thing is to compute tax liability. And because there are assets, so it means I have to compute my capital allowances, right?
Capital allowances. Yes.
Computation of capital we said for you to compute capital allowance, we have to do the following. You have to determine the year of assessment, right? Then basis period assessable profit, right? Basis period capital allowance. Better, but let me just use BP for basis. Then QCE. You want to allocate the QCE. So we have 2020 year of assessment, Abby. The company commenced on 1st of March, Abby,
Yes.
2018, and ended in 28 February
February.
2019, Abby.
No.
Number
Yes,
one
sir.
is it must be a full year. I mean, it must not be more than a year. And going by that rule, it is not more than a year. The second rule is that it must end at the accounting year end. Going by that rule too, it ended in the accounting year end. Are we together? So we just repeat what we have here. So we have motor vehicle as the all assets here were purchased before they said on or before February 1, 2018, right? Are we together, please?
Yes, sir.
So since all assets were purchased, I did not bother myself. Let me just go straight to compute capital allowance. So I have motor vehicle, right? I have industrial building. I have ranching, right? And I have furniture
Yes.
and fitting. And I have my total.
Scroll up more, sir.
What do you say?
Please scroll up.
More columns, sir.
Barely see it.
Or better, let me create a table.
Like,
I have 1, 2, 3, 4. So let me just create a table of 5.
Or better, let me just create a table. We just create a table so that you can understand it better. So that's fine, okay?
So I have motor vehicle, right? I have industrial building. I have ranching. And plantation, right? I have furniture and fittings. And then I have total, Abi.
Yes.
I have initial allowance, 50%, 15%, 30%, 25%. That's for initial allowance. I have my annual allowance. That's 25%, 10%, 50%, 20%. Abi?
Sir, are we giving this percentage in the question?
Yes.
Yes, at the back of the question.
So we have 2025, right? We have cost. This asset is 6,500, right? We have 14,680. We have 3,000. And we have 1,850.
850.
We have initial allowance. And that's 50%, that's 3,250. Abi? 15% of
Yes.
14,680 is what?
3,250.
Pardon?
It's
2,250 back?
3,250. Yes.
2,202.
2,202.
Yeah.
Then the next one,
Yes, that's 15%.
we have 30% of 3,000. That's 900, Abi.
900.
Yes.
And we
Yes, sir.
have 25% times 1,850. That's 462.5. Abi?
Okay. Yes, sir.
Plus, so you add all of them together. So you have 462.5 plus 900 plus 2,202 plus 3,250. We have 6,814.5. Abi?
Yes.
Yes, sir.
Annual allowance, that's cost minus initial allowance times the annual allowance rate. Abi? We have 65
Yes, sir.
minus 3,250 times 25%. And that gave me 812.5, Abi?
Yes, sir.
I'm doing the same for this one. I'm doing 14,680 minus 2,202 times 10%, Abi? And that gave me 1,427.9. I'm seeing your hands. Rotimi.
Yes, sir. Well done, sir. Sir, are you listening, sir?
Yes, I can hear you.
Okay. I'm looking at the basis period for the assessable profit and the capital allowances. I noticed that they are the same. Are there
Yes.
instances whereby the period for capital allowance will be quite different from that of the normal assessable profit? And how do we determine that?
Now, when we were doing capital allowance, we said the basis period for capital allowance will be same as basis period for assessable profit. Only that there must be no gap and overlapping in the basis period. Now, if you notice, when we're doing when we're using old rule, the old rule is saying from the date of commencement to 31st December of the same year. And then the second year is from the date of commencement to accounting year end. So you are likely going to be repeating what you have in year 1 in year 2, and that's called overlapping. So in that case, basis period for capital allowance will not be same as basis period for accessible profit.
Okay,
Number
thank you,
2,
sir.
do you understand?
Yeah, I'm getting it, sir.
Yes. Also, when you do changes in accounting dates, depending on which of the dates you decide to choose, probably you decide to choose either the old date or the new date. If you are choosing the new date, there's likely going to be a gap in the basis period. So in that case, what the rule is now saying is end at the end of the basis period. I mean, for the next capital allowance, it will end at the basis period for capital allowance and then end in the accounting. I mean, start from the end of the capital allowance and then end in the basis period for capital allowance. Don't worry, I would look for a changes in accounting date question and treat in this class for capital allowance purpose. But those are the two instances where you have repetition.
Okay, thank you, sir. Thank you, sir.
You're welcome. But don't worry, I will solve similar. So we now have 300 minus 900, Abby. Sorry, 3,000, beg your pardon. Minus 9,900 times 50%, Abby. That's 1050, right? Jacket. We also have,
Sorry, excuse me.
please.
Excuse me.
I can hear you, please go ahead, sir.
Okay, thank you. Please, this annual allowance, are we taking the percentage after the initial allowance or on
Yes, is
the
after
cost?
the initial allowance.
So it will be cost minus initial allowance,
Times the annual
then
allowance
balance,
rate.
then without do the percentage.
Exactly.
Okay, thank you.
You're welcome.
Sir.
So we have 8,128.5.
Hello, sir.
Yes, please.
In the industrial building, the annual allowance is 1247.8.
I didn't get you, please.
Industrial building, annual allowance 1247.8.
Okay, I will check that. Please confirm that minus 2. So if you want to
It's
1247.8,
correct, sir.
correct. 1247.8. Abi?
Yes.
So let's add the 4 of them together now. 812.5 plus 1247.8 plus 1050 plus 2775. And that gave me 33.
3,387.
Yeah,
8.
0.8,
Point
Abi.
Point
8.
eight. Yes,
Yeah.
0.8.
So let's add the two together. So we have 6814.5 plus 3387.8. So what do we have?
10,202.3.
Oh, basically, this is what I need.
0.3.
Oh, yeah, but for um so 65 minus 3250 minus 812.5, what do we have? minus 6.
2,437.5.
What do you say?
2,437.5.
2,437.5. Abi?
Point
Then
five.
Yes, sir.
Yeah.
the next one,
11,230.2.
11,230.2.
230.2.
Abi? Yes,
Yes,
one.
sir.
Yeah.
1,050.
2,000.
1,000.
1,050.
1,005. Next one, please.
1,110.
All right. Are we on the same page, please?
1,110, not 100.
1,110. Abi?
Yes.
Good. So compute the tax liability. So I want to do the second part of the question now. I haven't gotten my capital allowance. I want to compute the second. B. Computation of company income tax liabilities for 2020 year of assessment. Abi?
Yes.
So we have adjusted slash accessible profit.
Like
How much is that?
$21,950.
21,950.
Then we have less
Capital allowance.
right?
Relieved. Yeah,
Yes.
I should be relieved.
Then total profit. How much is the total profit? $21,950 minus 10,202.3. Abi?
11,747.7.
11,747.
11,747.7.
Abi?
Yes.
Yes, sir.
Now I have how many?
Income tax, CID, 30%.
Income tax. Now the question was specific that it is a medium-sized company, right?
Yes, sir.
So that suggested to me that I'm using 20%. Abi?
20%.
Yeah. So 20%.
CAIT.
Yes. 0.2 times 11,747.7. What do I have? 2,349, right?
2,349.54.
Then I have tertiary education tax. At 2.5% assessable profit.
5%.
So we have 2.5% times 21,950. That's 548, right?
548. 7.5. 548.75.
What's the total now? Two, three. That's
898.
2,898.
898.29.
Do we have any question? Do we have any question?
Sir,
Suppose we have loss relief. How is it going to be treated?
Yeah, you treat loss relief before capital allowance.
Okay. Thank you, sir.
You're welcome. So, any question now?
Sir, can you share the table for the capital allowance calculation again, please?
Okay, I should show it on my screen.
Yes, sir. Just for like a few seconds.
No worries, I'll do that. I will also share the Word document with you after the class.
Thank you, sir. You can continue.
Okay. Do we understand what we have here? Do we understand what we have there, please?
Yes, sir. You can continue, sir.
Okay. So, do you want us to solve another illustration, or you are good for the day?
You are good.
That was
good, so I can prepare for.
Hello, sir.
Yes, please.
I want to get something. The pioneer legislation is talking about giving a kind of relief to pioneer companies, right?
Yes.
Now, from what we have done now, I'm trying to see where we have the pioneer or what is this to the company here.
What will relieve the company is actually the tax on the accumulated profit.
Please come again.
What will relieve the guy was that we didn't consider the accumulated profit.
Okay. So all the profits in the pioneer period will be left out of the tax net.
Yes, exactly. There's a tax holiday, so any profit will not be enjoyed.
Okay. Thank you.
You're welcome.
Sir, can you share the concluding part of the calculation we just did? The company tax and
I will share
tertiary
the Word
something.
document with you.
Okay, sir. All right, sir. All right, sir. Thank you, sir.
Hello, sir.
Hello, ma.
Please, sorry for drawing you back.
No worries.
I
Go
want
ahead.
to know this, sir. This question, is it last examination question or from our park? ICANN park.
Is it from the pack? Is an ICANN pass question. It was solved. Somebody was sharing that it was May 2021 diet. Number
Okay,
2.
sir. Okay, sir. Thank you. All right. Thank you, sir.
But sir, I saw something that I want you to clarify, sir.
Okay, go ahead.
In the park, when the park was explaining something there, annual allowance was calculated as cost minus initial allowance over number of years.
Yes.
How can that be? Is it correct, sir?
It's correct, and that's what we've done. You have two options. It is either you do divided by
Okay, sir.
years or multiply by the annual allowance rate.
Okay. I now get it.
How do you determine the years? Just do 100 divided by the annual allowance rate to give you the number of years the asset pays. So
100 divided by
gives you 4.
Okay, sir. 100 divided by annual allowance.
Yes, we give you the years the asset is supposed to use.
Okay. Thank you, sir.
You're welcome. I would have loved to solve this question because it has some issues with commencement rule, provision of capital allowance. But I don't know if you can spare me just 30 minutes of your time.
Go ahead, sir.
It is fine, sir.
Okay. So let's start. The story here is much, so can somebody assist me in reading it?
Sorry. Hello, can you hear me?
Yes, I can hear you.
So please, I want to clarify something. I'm not sure, but I want to know why are we using 2.5% for
Can you
TET?
please add more volume?
Okay, can you hear me now?
I can hear you.
Yeah, so what I'm is that why are we using 2.5%? I think we are doing 2020 year of assessment, and I don't know why we are having it at 2.5. Is it that the Finance Act was effective in 2020 or 2021? Because I know that Finance Act 2019 was effective in 2020. Finance Act 2020 that made the TET from 2.2 to 2.5. I don't know if I'm correct.
Yeah, it is. What you said is correct, but we are working on the assumption of the latest thing that you'll be tested on. That's why I used 2.5.
Okay, but we are working on year of assessment of 2020, which we are supposed to use 2 points.
Yes, but the examiner should be asking you what is prevailing at the moment. Do you understand?
Sorry. Please, I want to ask on this initial allowance and annual allowance. Is it now a standard or examiners will give us the rate to use?
The rate you have to use is the standard rate. This is the rate, but you still also be given the rate in the exam.
Okay. So we need to know by heart what is the standard rate for all the classes. If we are now given another rate in the exam, that is what will then apply.
You normally the examiner should not give another rate in the exam.
Okay.
Because ICANN is a standard exam, so we don't expect him to give anything outside the standard.
Okay. Okay. Thank you.
You're welcome. So let's quickly, yeah, yeah,
Sir,
correct.
if you don't mind.
I can hear you.
Sir, as regard the existing legislation and the Finance Act, when the exam is getting more nearer, is it possible for us to just let us get familiar with some of the things that we are likely to be applying for the sake of the exam? Like this 2.5% stuff is something that one is not that used to. Can we get some, like a list of what we need to get used to before the exam proper,
Yes,
so that we can
yes.
just few, maybe like
Anything,
few weeks or few days to the exam,
yeah.
sir?
The issue
Okay,
is
sir.
that Finance Act is not a law on its own. It's an amendment to an existing law. Do you understand? For instance, the
Yes, sir.
recent annual allowance, the most recent most recent Finance Act made an adjustment on investment allowance, made an adjustment on cryptocurrency, and made an adjustment also on tertiary education tax rate, and the adjustment on remittance of withholding VAT. So, like I said, it's an amendment on an existing law. So, what the only thing, the help we can give to you is once we are doing the topics, we'll be telling you what the Finance Act is affecting on each of the topics, and that is what we are doing in this class.
Okay, sir. As it relates to those topics.
Yeah, exactly.
Okay, I think that is fine, sir. That is fine.
Yes.
Like this one now. At least we have noted this one now. At
Yes,
least.
so that's just the whole idea.
Okay, thank you, sir.
You're welcome.
Hello, sir.
Yes, ma'am.
Please, in this pioneer period, I want to know which area that Finance Act 2023 has affected.
I didn't get you.
In this pioneer period, this pioneer legislation, I want to know which area that Finance Act 2023 has affected.
So it has not. I mean, the Finance Act did not affect the major rules in the pioneer period or something like that.
Okay.
But any other one, we'll let you know. Don't worry. As on by topic basis.
Thank you, sir.
You're welcome. Any other question?
Yes, sir. Can you hear
Any
me,
other
sir?
question? Yes.
Yes, sir. If we are given a question in the exam, if I can question was actually for 20, if the question is 2018, so are we expected to use the prevailing tax rate according to the Finance Act then applicable then?
No, we don't expect the examiner to ask you. I mean, 2018 is 5 years ago, and we know how dynamic the tax environment is. It's going to be a substandard exam. We'll be asking you about things gone by. In fact, we don't expect you to have a very full grasp of that. So what we should teach you is we should teach you the old one and the new one. But in the exam, we expect the examiner to ask you on the most recent occurrences and not the old one.
Okay.
Do you understand?
Okay. Okay, sir. Yes, I do. Yes, sir.
Hello, sir.
Yes.
Just for clarification, you've actually threw some light on it before. Someone has asked this question. back to the assessment here. While computing the annual allowance, I've checked before now. I've checked something is confusing me. Like I've checked the computation of the initial allowance of this very question that is just solved now. They used 10/12. That means they prorated. So,
Okay.
but with the one you are doing now, it's somehow confused me.
The issue is that in the
Do
solution
you get my
provided,
question?
I understand you. In the solution
All
provided
right,
in
thank
the
you.
study pack, they used the old rule in the first year of assessment. And that's why I wanted to solve this question too, to show you how it will work. So because they use the old rule, and the old rule says from the date of commencement to 21st December of that same year. So in that old rule, you will have what have you here? Are we together, please? You will have from March 1. You know the pioneer
We are
period
together, sir.
ceases February 28th. So we start counting from March 1. So let's count from March 1 to December. You have 10 months. That's why it was prorated by 10 to 10/12.
Okay.
Do you understand? So that's
Okay.
one
So
of the
this
major,
one,
but that was because they used the old rule in solving it. But I applied the Finance Act in solving. So everything you have
okay.
here is according to Finance Act.
Okay. Okay. So
Do
we
you
are going to
understand?
adopt the new. All right.
Yes. Obviously, you should adopt the new rule.
All right. All right. Thank you.
You're welcome. So we have Deodari. This question is actually I actually only manipulated November 2014 question 1. This Deodari. The original question is Osna Nigeria Limited. For those who may want to know if it's a past question. Does this still make sense to you?
Perfectly, sir.
Oh. So, like I said, what is the examiner asking me to do? Explain briefly the conditions for granting pioneer status incentive. I've explained that in the course of the lecture, right? Compute the tax liability for the company for the relevant years of assessment. Apply the provisions of Finance Act where applicable. All right. So we have computation of what? Company income tax liability. So I will come and check the question and check what is the years of assessment here. So I have 18 months to 2019, right? And I have December 2021, Abi?
Yes, sir.
Hello, are we together? I have 18 months to December
Yes, we
2019,
are.
and I have year end. So it appears to me that they are choosing December to be the accounting year end. So let me first come here and note the things I was noting before, Abi. The first one is the production day is when? The production day is July 1, 2015, right?
Yes, sir.
I want to also check, when did the pioneer period expire, Abi? Pioneer period expires there was no renewal of pioneer certificate, Abi. So because there's no renewal, so it just means that there's going to be from July 1, 2018 to June 30th, Abby, 2018. Does it make sense to you? Does it make sense to you, please?
Yes.
Can you recap, sir?
Because there was no renewal of pioneer certificate, so it means the pioneer period expires June 30, 2018.
3 years.
Abby?
Yes.
Yes.
So it means that the post-pioneer period commenced when?
1st July 2018.
Right?
Yeah.
So I will now call and do my 4 now. Computation of basis period for accessible profit and capital. Right?
Yes, sir.
So I have year of assessment, basis period, accessible profit, basis. Abby? So we have 19 year of assessment, Abby. When the pioneer period expired, 1/7/2018, Abby, so I will pick 1/7/2018, right? And the company ended. Look, let me explain this thing better in this way. I will erase the year of assessment. So when is the accounting year end? 31st December, ba?
31st December.
So I will say
Yes, sir.
to 31/12/2018, Abby. And it has to be on preceding year basis. So the preceding year is what? 2019. And we said it should be the same thing. Right? So for 2020 year of assessment, I will start from the end of this one and do what? 1/1/2019 to what? 31/12/2019. Now I'll do for 2021, right? 1/1/20 20, right? To 31/12/20. Are we still on the same page?
Sorry, excuse me.
Yes, sir.
Excuse me, please.
Please go ahead.
All right. You said earlier that after the pioneer period, then the commencement rule will apply.
Yes.
But from what you are doing, it's like you are using preceding year basis now.
Yes, preceding year basis starts from commencement. According to Finance Act 2019, It's from the year of commencement to start using preceding year basis.
Okay. So it's a 2023 Finance Act that changed it to commencement rule.
I didn't get you.
Now, what you are saying now is that as at this period, the Finance Act states that after the pioneer period, then the basis of assessment will be on preceding year basis. But
that is
currently,
that is for all companies, even till now. All companies are assessed to tax on preceding year basis. All companies. The only thing that makes a company assessed to tax on actual year basis is in the year of cessation, where a company ceases before 30th June. All companies, both on commencement.
Please.
Are we together?
All right.
It was in the old rule, that's before 2019, that you use actual year basis in the year of commencement. But as I speak to you, what we use is the new rule now, and it says preceding year basis. The only circumstance where a company can be assessed to tax on actual year basis is in the year of cessation, where a company ceases operation before 30th June.
Okay, so are you saying now that beside pioneer legislation now, for a new company, the commencement rule is still, it will not be on preceding year basis, not actual.
Exactly. Exactly my point.
Okay.
Hello, sir.
All right.
Sorry, I have a question.
Please go ahead.
Hello?
Oh, for this question, you're applying the new rule, right? Not the old rule.
Yes.
All right. Thank you.
You're welcome.
Hello, sir. Hello, sir.
Yes.
Question, sir.
Please go ahead.
In respect of this year of assessment,
yes.
I think the Finance Act effective from 2020, not 2018. And this the first year of assessment is supposed to be 2018, not 2019.
So the thing is, in the question, the man said use Finance Act, apply the provisions of Finance Act. So I'm ignoring the year, so to say, and I'm applying the provisions of Finance Act.
Okay, strictly to Finance Act, have you?
Exactly.
Please, sir, in order to avoid the confusion, sir, maybe if it is, let's assume that the question silent on the issue of Finance Act. How are we going to handle the first and second year?
So now the issue is that 2018 will be treated on actual year basis. 2019 will be treated on actual year basis. 2019 will be treated according to the old rule, while 2020 will be treated according to the provisions of Finance Act.
Okay. Okay. Thank you, sir.
No problem. All right. Does it make sense to you? Are we together, please? All right.
Yes,
The
sir.
fourth thing I want to do is to compute capital. Right? So let me come here. I need more tables this time. I have 1, 2, 3, 4 assets. I need 6. This is good. All right. So I have building, Abby. I have PPE. I have motor vehicle. I have F and F, right? And I have total. Investment allowance dash 10%, right? 0, 0, right? Annual allowance, I have 15%, 50%, I have 50%, I have 25, and I have, sorry, I'm supposed to put initial allowance here, sorry. Initial allowance. Then annual allowance, I have 10%, I have 25%, 25%, 20%. Does this still make sense to us?
Yes, sir.
Yeah. Right? So we have building. So we have 2019 year of assessment. We have cost, right? 20,000. Julius, you can go ahead. Yeah.
Sir, in the previous question we did,
Yes.
we solved, we didn't have investment allowance. But we
Yes,
are having
because we
investment
did not.
allowance in this one now. In
Because
the
we did.
table.
Yes, because in the previous question there were no plant and equipment and plant and machinery. Investment allowance only applies to plant and equipment and or plant and machinery.
Okay, thank you, sir.
Welcome. In fact, from next year now, we'll be relieved of the stress of investment allowance. They are just stressing someone that is teaching. Every year you have to be renewing your. So we have a calculate. So let's go ahead. 10% of 18,750 is what? 1875. Abby? But we said it should not be deducted from the cost of the asset. It should not be deducted from the cost of the asset. So we have annual allowance. Sorry, initial allowance. I have just barely 15 minutes more because of your other lecture. So what's 15% of 20,000, please? That's 3,000, Abby. 0.5 times 18750. That's 9,375, Abby. Then we have 12,500. 5, that's 6,050. And 6,350 times 0.25. That's 1562.5, Abby. That's 3,000 plus 9,375, 6,250, 1562. Abby. So we have 20187.5. Abi? So we have no allowance. So that's cost. Now there's an issue here, and that is that the first year of assessment is not up to 12 months, right? And we said where the annual allowance, where the basis period is not up to 12 months, annual allowance should be prorated down to the number of months in the basis period. Do you understand?
Mm-hmm.
So we have,
Sir.
eh?
The PP, the investment allowance. I think they are meeting it.
Yes, I did put it on that PPE, Abi.
That has not been calculated.
It has been calculated. I have 1875.
It has been calculated.
But it was not written there. That's the problem.
Yes.
It wasn't written under the PPE.
I was going to explain. I was expecting somebody to ask me that question. So yeah, in reality, investment allowance is not deducted from the cost of the asset. Do you understand? So in your exam, it's safe that you put it under total because of the village people and stepmother effect. You understand? If you put it here, if you put it here and you mistakenly press calculator, it affects your figure. Do you understand? If you put it here and you are so sure that you remember that you are not supposed to deduct it, it's fine. Do you understand? But the law provides that it's not deducted from the cost of the asset. And don't forget, anything under here is supposed to be deducted from the cost of the asset. Do you get my point?
Yes, sir.
So we have 20,000 minus 3,000, Abi? Times how many months from July to December?
7 months.
6
months.
6 months back. So
Yes,
you now
sir.
do times 10%, we give you what?
17.
What I have here is 850. Is that correct?
Yes, it's correct. Yes, sir.
Okay. The same thing I'll do here. I'll do 18,750, right? Minus 9375, right? Times 25% times 6/12. And what I have is 937.5, Abi? Do you understand?
Can you just have a small calculation for one of them so that you can remember when you are going through this?
For one of them, Abi?
Yes, sir.
So I have
as a reminder when we are going through it.
3,000 minus, 20,000 minus 850, right? Times 25%. Sorry, 10% this time. Abi? Times 6/12.
It will be minus 3,000.
No, sir.
Sorry,
Minus 3,000, sir.
minus 850
What
or
is
3,000.
20,000?
Because I mentioned stepmother and she's not coming after me in this class. So you have 12,500 for the next one. 12,500 minus 6,250, Abi?
Yes, sir.
Times 25% times
6/12.
6/12. What do I have? 781.25, Abi?
930.
Then I have 6,250 minus 1562.5 times 20%, Abi, times
Yes, sir.
6 divided by 12. What I have is what? 468.75. So if you add everything together, what do you have, please? So you have 468.75 plus
Sir,
781. Yes,
for the
please.
PPE, for the PPE, 937.5. I don't understand how you get that part.
I didn't get you.
I mean, for the annual allowance of the PPE, I don't understand how you get the 937.5.
18,750 minus 9,375, right?
Okay. Yes.
Times 25%.
Okay.
Times 6 over 12, Abi.
Yes, sir.
Yes.
So what you have
I'm
is
not getting what you
2460,
wrote,
Abi.
sir. I get 1,171 point.
1,171.
18,750.
171.88.
18,750 minus 9,375, Abi. Times
Yes.
25 times 6 over 12.
1,171.88.
What I got is 1171.875, Abi.
Yes.
Okay,
Yes,
sorry.
sir.
Sorry. So what do I have, please? So I have 850 plus 1171.875, right? Plus 781.25 plus 468.75. So we have 3271, Abi.
Yes, 0.875.
0.875. So what's now my tax return value? So I have 2,000. So 20,000 minus 3,000. Abi,
17,000.
minus 850. I
Yes.
have 16. Sorry,
16,000.
16,915. Abi. Then I have 18,750 minus 9,375. Abi, minus 1171.87. So we have
8,000.
8203.
The
Abi.
first one is
8,000.
not correct, sir.
What is
Yes.
it?
0.125.
Then we have 6,250 minus 781.25. Abi.
That one is 5,468.75.
5,468.75. Abi.
0.75. Yes.
And here you have what? 6250 minus 1562.5 minus 468.
4,218.75.
So I have 4,000
4,218.75.
218.75. Abi. So let's add all the capital allowances
Yes.
together. We have 1875 plus 20187.5 plus 3271.87. So we have 25, right? 334.375. Does it go down well with everybody? Yeah. For
16.
what do you say?
The first one is 16,950. 150, not 915.
Okay, 950. Okay, thank you.
150.
150.
Yes.
So we have 2020 year of assessment, Abi. I have annual allowance, right? Because I prorated the first year. Are we together, please? Because I prorated the first year, the annual allowance will be cost minus initial allowance. Sorry, because I prorated the first year, the annual allowance will be tax seasonal value divided by n minus 1. So in this case, I have 16,150 Abi. So since I have 16,150, that's tax seasonal value. Are we still together?
Yes, sir.
And you know, I prorated the first year. And the asset is supposed to use 10 years. Abi?
Yes.
100 divided by 10 is 10. So I will do 10 minus 1, and that's 9, Abi. So I have 16,150 divided by 9. What do I have?
1794.44.
Eh?
1794.44.
1794.24, Abi.
44.
Okay, good. So the same thing we are doing for PPE. PPE is supposed to use 4 years. That's 100 divided by 25. So we have 8203.125, Abi, divided by 3. So I have 2734, Abi, 0.375. For motor vehicle, I have similar thing. So I have 5468.75 divided by 3. And that's 1822.92, Abi. Here is furniture. So furniture is supposed to be 4218, right? 0.75 divided by 4. And that gave me 1054.688. Are we together now? So we have total allowances will have 1794.44 plus 2734 points, right? 0.375 plus 1822.92 plus 1054.688. So what do we have? 7406.423. Abi? So 2021. Sorry, that's that value now. Am I alone in the class? Hey, I'm alone.
Yes, sir.
We are with you, sir. We are with you.
So you have 16,150 minus 1794.44. And that's what? 14,355. Abi? 0.56. Here I have 8203.125 minus 2734.375. That is what? 5468.7. And here I have 5468.75 minus 1822.92. And that's what? 3645.688. What?
In F3.
And there you have 4218.75 minus 1054.688. That's what?
3164.
3164. Point what?
062.
Now, in this case, all you need to do in the next year is just to repeat what you have in year 2, in year 3. So the annual allowance remains the same. So we have 17944, right? We have 2734, 375, 1822.92, right? We have 105.688. We have 7406. Are we together? So in our next class, we will then determine the tax liability, because your next class is supposed to start by 9, Abi.
9. Yes, sir.
Yeah. So permit me to round up here. So in our next class, I will determine the tax liability, but in the interim, I will share the video with you, and also I will share the solution with you. Thank you for joining the class.
Thank
you so much, sir.
Yes, please.
Sorry, sir, a minute, sir. This issue of proration, after the first year, we will not consider the. We just go straight to the other year. We will not consider the minor of the first year.
Yeah, the effect of the first year was why we did that. That is because of the effect of the first year. Because if you notice, in the first year we just did 850, Abi. So there is a balance of about 850 naira that's not covered in the first year. So that's what we are spreading over the remaining years. That's why we are dividing it by the remaining years.
Okay, the aspect will not pass the total year of assessment for the value of the.
It must not pass it.
Okay. Thank you.
You're welcome.
God bless.
You too. Any other question before we call it a night? Mr. Rotimi, please go ahead.
Yes, I have 2 questions, sir.
Yes, please go ahead.
Okay, I just want let me say clarification on this annual allowance for the second year of assessment, which is 2020. I thought the formula was supposed to be cost minus initial allowance over n minus x.
N minus x, Abi?
Yeah, I mean cost minus initial allowance all over n minus x.
For which one?
Yeah, but I tried to apply that for the 2020 year of assessment.
That's what no, it's the tax incident value divided by the remaining useful life of the asset. For the subsequent year, in the case where you prorate the annual allowance.
Okay, in case where we prorate, it will be tax incident value all over n minus x.
I don't know what you mean by x, but what I know is 1 is constant. So just do the useful life minus 1. But if 1 is the same thing, if 1 is what you mean by x, then you are correct.
Sir, how do you get the n, sir?
The n is just 100 divided by the tax rate.
Because I tried to apply that this formula, and what I have on my screen here is giving me different distance. Maybe we'll address that in our next class, sir.
Okay, that's fine, no problem. I'll be available to attend.
Also, a question on the pioneers distance. Is it possible for the taxpayer to maybe is it possible to have a gap between the first that is first 3 years and after maybe a interval of 2 years before the request for the remaining 2 years?
No, it has to be together. So once it is expiring, it is either you renew or you don't renew. You don't assume that you are in the post-pioneer period and then go back to pioneer period again. No.
Okay, sir. All right, sir.
Do you understand? If you've left the pioneer period, once you are married, no divorce. So the same thing here. Once you have left the pioneer period and you have assumed the pioneer period, you can't go back to the pioneer period again. Is that what you're asking?
Yes, sir. You address that. Thank you so much, sir.
You're welcome.
Sir, don't forget to share the video, sir.
Yeah, I will do that. I'm extracting already.
All right. Thanks so much, sir. I thank for the class today, sir. God bless.
You're welcome.